Welcome to Bears in Exile. Today is September 1st, and it is time for the market overview, looking at the Dow, SPX, VIX, XOY, TNA, UUP, FXE, GLD, and SLV, which we actually missed last night, which was a mistake, so sorry about that. And anyways, on we go with the Dow. It was once again a pretty wide range day, ending at the lows of the day, and the body is a little bit too big for an inverse hammer, but it is the same type of structure. Interesting that we were just like a microscopic little hair away from being a bearish engulfing, and that's because it opened just, I don't know, a tenth of a percent, or some crazy decimal below yesterday's close, which invalidated having a bearish engulfing. And the conspiracy in me thinks that they do that a lot on purpose, but yeah, you see it happen all the time, and it's a little frustrating, but it is what it is, and we'll just roll with it anyway. Last night we talked about how the short-term moving averages had not achieved complete crossover and separation prior to entering the bar. And sure enough, that was correct. That was our warning flag, and it was correct. We have a down day today. Does that mean we're going to have a down day tomorrow? Well, we'll have to wait and see. However, we do have a downtick now, and the downtick is 11,400, which I think is completely reasonable, and we'll have to see what it wants to do at that time. We actually have a major price consensus level just above 11,300, so it is entirely reasonable to assume that should we break through 11,400, that is where we're going. It also coincides with this line of resistance we had. Now it should be support, possibly. So if we go down and bounce off of that, that would be entirely healthy and a good thing. Beyond that, CCI ticking down, fast stochastic ticking down, slow stochastic about to tick down for us, 14-day RSI moving average ticking up. We talked last night about these turning around, coming down, and turning around again and joining it on the ascent. We are looking for that. So if these go down and test that previous resistance and bounce off of it, that will probably take these all the way down to that point, I'm imagining, or close to it. In any case, that would be a good point for it to turn around and then go. RSI ticking down, slight tick down on the MACD histogram. MACD itself still ticking up. We talked about the divergences last night. I guess we'll take a quick look at them and see what we have. We had the minor one on the CCI, and now it is fixing itself. We had the ones on the stochastics, and those are now fixing themselves. Same thing with the RSI and with the MACD histogram. So this is healthy. SPX, same candle as the Dow, same everything as the Dow, with the exception of a downtick target. We have a downtick today. It gives us a target right at 1190, which is the upper minor price consensus point. However, I think it would be more likely that it would go to the major price consensus point at 1180. So two levels to look at, and then we have 1170 roundabout for the previous resistance, which may be support. This is very early in any kind of a down move, so if it were to chop here a little bit, that would be fine as well. What we are not expecting at this moment is a major penetration into the bar. However, anything's possible, but the odds of that happening are less. Of course, CCI ticking down, fast stochastic clicking down, everything the same as the Dow, waiting for the slow stochastic also to roll over, and both of them go down to meet the 14-day RSI moving average. On to the VIX. VIX is very slightly positive today. I don't think that the body is big enough to classify it as any kind of like a miniature hammer or anything like that. It's just another star. But we did say yesterday that the short-term moving averages were not in any kind of alignment to do damage to the bar. And certainly we see that today. We have no damage to the bar. We have no penetration of the bar. It is, even though the candle is inside the bar, the short-term moving averages have not crossed into it. So CCI ticking up, 14-day RSI moving average ticking down, fast stochastic clicking up, slow stochastic probably is going to loop over and do the same. We're looking for these to go back up, join the 14-day RSI moving average, turn around, and join it on the way down. Down click on the MACD histogram, down click on the MACD. And we looked at the divergences last night, and they are fixing themselves. Which ones did we have? We had one in the slow stochastic, which is fixing itself. We had one in the fast stochastic, it is fixing itself. RSI fixing itself. MACD histogram fixing itself. So completely healthy. It's just all there is to it. XOY not losing as much as the SPX or the Dow, but all the secondaries are identical. And this one we had noted had even weaker short-term moving averages as it approached the bar. So for it to come up and sit here is completely normal, but some further down action as the stochastics roll over would be good. TNA, our favorite piece of garbage. This one, our major disappointment. Had its downtick today. It was resolved intraday, went all the way down from 50 down to 45. And very similar to the Dow, but maybe a little bit weaker. Down click on CCI, down click fast stochastic, almost a down click on the slow stochastic. Finally, we are outside of the oversold area of the 14-day RSI moving average. RSI clicking down, histogram ticking down, and MACD itself a minor click up. So we do have a major price consensus level here at 40. Does that correlate well to the down move that potentially could happen in the Dow and the SPX? That's really hard to say, because this one's been real iffy. It either doesn't move as much or it moves too much. Certainly it's possible, but I'm not going to say that it needs to go to 40 again. But yeah, TNA, just kind of a bummer all the way around. UUP, alright, it had a big gap up. It has a ugly little spinning top looking thing with a giant tail on the top of it. And look at the short-term moving averages. We are getting major crossover, and does it have enough room to get to the bar and do complete crossover and separation? I don't think so. Certainly an indecision candle here would indicate that going sideways is more likely, even if it's a minor up or a minor down. Either one of those moves is not going to be enough for the short-term moving averages to achieve all of that in such a short space, unless it were to gap up above the bar. But that, I mean, you do have some major gaps in the past, some gigantic gaps. Unless it gets that, and it's already above the upper Bollinger Band, it's unlikely to me. We did mention last night that it was entirely possible for it to go up today, since we had a continuation candle and all of the secondaries were pointed up. We were completely fine with that, and it coincided with our belief that there would be a stall at the bar with the major indexes, which did occur. So this move is according to plan, and with this indecision candle, with everything still ticking up, we need to see how far it is going to go. But if the indexes are going to go down to 11,400, certainly this can go up some more. We're going to have to see. And its sister sibling, FXE. We were noting how the short-term moving averages were not did not have good separation, and we had a continuation signal with the middle Bollinger Band trying to get above the short-term moving averages. We did get that today. We have a spinning top today. It is below the lower Bollinger Band today, and all of our secondaries are clicking down. So while we have a lot that indicates weakness, possible further weakness, this being below the Bollinger Band does make me think, along with it being a spinning top, that a sideways move tomorrow would be more likely, but we'll see if it does push it down. Kind of interesting how it is turning over right now after it broke this previous peak over here, and certainly it had many more to do as well, but it's kind of surprising it has this much weakness this fast. So I guess we can just thank the politicians for that and move along. Gold. We said yesterday how gold was looking good in that the short-term moving averages were still pointed up. We said that the middle Bollinger Band was right in the center, and it still is. We have something in between a miniature hammer and a spinning top today. Not very strong of an indication in any direction, but we did postulate that QE3 would be good for gold. We said that the market's going down would be good for gold, and we are up slightly today. On the secondaries, downtick on CCI, uptick on the fast stochastic, downtick on the 14-day RSI moving average, side tick on the slow stochastic, slight uptick on the RSI itself, slight downtick on the histogram, and a downtick on the MACD. Very, very mixed bag, which kind of goes along fine with this being a little consolidation / indecision area. So we'll see how that develops over the coming days, but I don't expect this to roll over like the euro just did. So we will see. It is also kind of interesting to me that with the dollar being up pretty good today, that gold was up. You know, gold is priced in dollars. So when the dollar goes up, it should make gold more affordable, but gold still went up today, indicating to me that there is some continuing concern out there, which does match up with the VIX, which is why we call this our second VIX. SLV also slightly up today, also like gold, either miniature hammer / spinning top looking formation, miniature Bollinger Band, middle Bollinger Band, right in the middle of the short-term moving averages, which are still slanting up. CCI essentially a side tick, slight downtick, side tick. Fast stochastic clicking up, slow stochastic clicking down, 14-day RSI moving average clicking up, RSI itself clicking sideways, along with sideways on the MACD and the histogram. So I've just been in the sun for the last couple of hours, so my not getting all of my words right. But anyway, there you have it. Certainly it looks like a failed, or possibly a failed, it is still early, possibly a failed bar retest, which does match up with short-term moving averages. If we get further downside, that will be welcome, and then we're going to see. Tomorrow is the big jobs report, and certainly that is going to have an impact of some sort. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.